Hi, my dear friends. Welcome to our webinar on amalgamation and internal reconstruction. Hearty congratulations to all of you who have successfully made it to attend this particular webinar. Let us just take a couple of minutes. We will give a chance for our other friends who are attending this just to quickly jump in. At 4:02, we will sharp start the webinar. Meanwhile, let us just quickly gear up and make sure that we have we have books with us, a calculator for us to do the calculations, notes to make sure that we are writing down some important stuff that's being discussed here. So let's make sure those basics are available with us. I'm repeating, it's good you have a book, pen, calculator, preferably I would say study material you should have with you. When we are discussing some points, we might take the reference of study material. So just go and quickly get your study material too. We are talking about study material which has amalgamation and internal reconstruction concepts. All right. So in this session, which might last somewhere between 1 to 1.5 hours, just be okay with that, because we are going to touch upon the important logics which will be applicable in the entire concept of amalgamation and internal reconstruction. Conceptual clarity once we have, applying this into problems will be easy. So we will make sure that those concepts which you would have probably already learned to some extent, but here we will refresh them and we will hear those concepts once again. Let us make sure we master those concepts over this webinar. If you have any questions, like always, just drop in your comments, questions, whatever you feel, you can drop in, which is, of course, when I say whatever you feel, which is related to amalgamation and internal reconstruction, you can drop a note in the live chat and we will talk about it once we find some time. All right, so let's just wait for 30 more seconds and then we will get started. Before that, just a quick tech check. Is everybody able to see me and hear me well? Can you just drop in a note in the comments so that we can be sure about the technical aspects as we are moving ahead? Okay, excellent. All right, so let's start this wonderful concept of amalgamation and internal reconstruction. So how are we going to approach this? As you know, this is a topic which gets tested for something around 15 or 16 marks to 20 marks in our examination. So obviously important. The lowest you can say is like 10 marks. That's the minimum you would anyway get from amalgamation. But generally, I think you can expect somewhere between 10 to 16 marks easily for your exam purpose. All right. Now, what are the special points that we are going to focus on in this webinar? Right. First one, the most common areas where the students make mistakes in exams are the ones which we will emphasize and spend the most time. The effort is to make sure that you get those concepts right and you don't make those mistakes in the exam. So that is going to be my highest priority. The second thing, the areas that get tested the most for the exam purpose are the second category that I would look at. So this is broadly how I'm planning to pace my session. I hope everybody is okay with that. So we are going to talk about the areas where students make the most mistakes and the areas where examiner asks maximum number of questions, right? Now, if you look at amalgamation concepts, see, I don't want to really go into the philosophy of amalgamation. You know, amalgamation is essentially two or more companies coming together and they may become one entity, etc. So that concept of amalgamation, basics of amalgamation, I'm assuming you know. Arcelor and Mittal come together and become ArcelorMittal. Tata and Chorus come together and become Tata Chorus, right? So this kind of in the way in which two companies come together and form one entity, when A and B come together, they may become A, or they may become B, or they may become a new entity called AB, right? So all are possible. Now, in this amalgamation, what are the most common areas where students make mistakes? Any guesses, friends? According to you, where do students make the most number of mistakes in the exams? Can quickly, in the comments, can you just quickly jot down, or can you quickly throw the key points that you think are the ones where students make mistakes? Anyone? Okay, PC, purchase consideration, calculation of purchase consideration. This seems like a song, isn't it? Right? So that's exactly what it is, friends. Calculation of purchase consideration is, yes. My wonderful friends, purchase consideration is the area where students make the most mistakes. Journal entries are quite simple if you understand the fundamentals of purchase consideration and the basics of accounting, accounting treatments. Sometimes in debentures, purchase consideration payment or net assets method. Okay, right. So good. Now, please don't post any more comments. I'll ask you whenever like this, I want you to respond with comments. I will ask you now. You will not closing books of selling company. Okay, right. At least in terms of examiners' feedback, uh, almost 70-80% of the times the mistakes happen primarily because the purchase consideration is wrongly calculated. Okay, so whatever you correctly guessed as the area of concern is actually the area of concern. Okay, right. One small point, in case some of your other friends who you think would be benefited by they attending this session, so quickly share this link and make sure they come into the webinar as soon as possible. Right, we are just about five minutes into the webinar. Right now, when we talk about the purchase consideration, what is the way in which we should first approach it? What is the mindset? Right, so the details follow, but what is the mindset? How should we think about the concept of purchase consideration? Purchase consideration does not differentiate or does not differ whether you calculate it for the selling company or the purchasing company. Because if I say I'm purchasing this bottle, right, you are the seller of this water bottle, I'm the buyer of this water bottle. Purchase consideration is the price at which this water bottle will be sold by you and the price at which this water bottle will be bought by you. So essentially, the purchase consideration will remain same whether you are asked to prepare the books of the seller or the purchaser. Are you clear about it? Friends, this is the first and foremost thing. Do not change the purchase consideration calculation for buyer and seller, saying, oh, this is the purchase consideration for seller, this is for buyer. Wrong. No, that's not what you should do. Purchase consideration does not change whether it is for a buyer or a seller. That is point number one. Second point regarding purchase consideration. Purchase consideration is keep all the big principles aside. After all, two people are deciding and buying something, right? So if, for example, this is the bottle what I am buying, right? What is the purchase consideration of this? You'll ask me, hey, how much did you pay? Naturally, how much did you pay is the next intuitive question, right? So somebody is asking about PC payment or net asset method. Sachin, listen to this. So here, when I say I bought this bottle, your question would be, what is the price at which you purchase this water bottle? So if I say that I purchased this water bottle by paying, say, I paid 500 rupees and purchased this water bottle, then the purchase consideration is 500. This is called purchase consideration using which method? Which method is this? This is what I paid to purchase this bottle. Which method for calculation of purchase consideration are we talking about? Anyone? Quickly comment on that. What is the method that we are following? Payment method. Mohan, are you sure it is payment method? Anyone else? Payment method, purchase method, net payment method, net payment. Hare, I was expecting purchase that purchase method, merger. I thought something like that you will tell me. Hare yaar. Net asset method. Shailaja. All the nice. So I actually want like a bunch of answers. No method. Sheza is like, sir, what nonsense? How can there be a method for this? No method. Somebody is like, lump sum method. Somebody else will know, right? James Bond method, right? Pooling of interest method, but write whatever you want. Now listen carefully. Stop. Over. Stop. All the writing business is done. Concentrate. This is done. Now, no more comments till I again ask you for. Please focus on this. This is called payment method for purchase consideration calculation. There are two methods generally we follow for purchase consideration calculation. Payment method, net assets method. Please do not confuse this with amalgamation in the nature of merger, amalgamation in the nature of purchase. Amalgamation in the nature of merger, amalgamation in the nature of purchase are only for accounting. Please understand, my dear friends, purchase consideration is not accounting. Purchase consideration is basically valuation. It is ascertaining the value of, if this is the business, then the value of the business. So my dear friends, do not, for God's sake, talk about no method, lump sum method, purchase method, or net asset method, pooling. No, it's not all of that. What is the method we followed? Payment. Why? Obviously, if you want to know the correct value of the asset what you bought, then the obvious thing is, how much did you pay? What did you pay to get that asset? So friends, the important clarification what we got from this discussion is, for purchase consideration determination, the preferred method, I will call it preferred method, is payment method. Why is preferred method payment method? It is preferred because there is more accuracy in the payment method. Okay, right. So it is the preferred method. I called it preferred method, but I did not call it the only method. Why? Because there are other ways. Now, when I say it is a preferred method, in the question, if there is information in the question, if there is information given with respect to the value at which the asset is purchased, means the business is purchased. Okay, so this is what we paid. So what are the ways in which that will be given? I am the buyer, say you are the seller. I gave you 1 crore rupees. Oh, okay, fine, straightforward. I gave you 1 crore check. Oh, okay, fine. Our cash or check, whatever, that is done. Okay, then I gave you 1 crore worth of land. Oh, okay, fine. That is also purchase consideration. Okay, right. I gave you 1 crore worth of this, say, painting. No, that's not worth that's not worth 1 crore. That is worth some 200 rupees. But still, I'm saying, if I give you a painting worth 1 crore, yes, that is also called as purchase consideration. I gave you 1 crore worth of shares. That is also called purchase consideration. I gave you 1 crore worth of debentures. That is also called purchase consideration. My dear friends, come back. 1 crore worth of something I gave you. Okay, 1 crore worth of something I gave you. That is what we mean by payment method for purchase consideration. What did the buyer give the seller? What did the buyer give the seller for this purchase to happen? That is what we mean by purchase consideration under payment method. Are we clear about it? Right. Now, sometimes what may happen is people get confused. Sir, say I'm the buyer. I gave 1 crore worth of shares, but face value of those shares is 10 lakh rupees, but they're sold in the market at 1 crore rupees. Now, the simple question is, somebody is asking, how long will this class be? It will be somewhere between 1 to 1.5 hours till we all are convinced that the 15 to 20 marks which we might get from this chapter, we will pocket. Till that time, the class will continue. I hope that is okay. Is anybody in like extreme urgency that, sir, urgently at 5 o'clock I have to run and I have to go and get beaten up by police? Is anybody in urgency? I don't think so, right? So if anybody is in like that level of urgency, then that's fine. Maybe they will do a webinar from the police. But otherwise, I think we can make sure that we understand this concept before rushing into something. Okay, right. Come on. Now, concentrate back. So here, that purchase, whatever we are making, when we say this is what is going out, No urgency, sir. How's the Josh? Did you see me in any Josh less than the Josh that you are seeing me? Okay, so you would never see me in any less Josh, right? So that question itself is invalid, out of syllabus for me. Josh will always be high, and any low Josh or less Josh, that answer is fully out of syllabus. My student, I think you should have known that answer. Anyway, right. Let's move on. So here, when we talk about the payment, concentrate here, very careful. I am giving shares which have face value 1 lakh or face value 10 lakhs, but I'm giving their market value is 1 crore. I'm giving 1 crore worth shares to somebody. Now, when I'm giving 1 crore worth shares to somebody, friends, let's be clear that 1 crore worth shares, what we are giving to somebody, the purchase consideration for that, will I say it is 10 lakhs or will I call it 1 crore? 1 crore only. Very simple here. What is the worth? What is the worth of the shares that I'm giving? What is the worth of the debentures I'm giving? What is the worth of the equity or preference shares, whatever? What is the worth of whatever the buyer is giving to the seller? That is what we prefer to follow, prefer to use, because that obviously will be more accurate. Okay, right. Now, if this method is not possible, if this is not possible, how is it? How can it even happen that this method is not possible? Friends, the question silently said, buyer purchased the business from seller, and there is no information regarding the value at which the buyer purchased the business from the seller. Then what would you do? Say, imagine I simply gave a group of assets like this. Okay, so what are the group of assets? One old phone, one AC remote, one water bottle. All these put together are the assets. All put together, I'm purchasing. I'm purchasing all these assets put together from the seller. Now listen carefully. I asked the seller, "Hey, how much should I pay for this?" Seller said, "Kuch de do, sir. Aap hi de do, soch ke de do." Right? We keep hearing these kind of things, right? So something like that. So the question is silent in our context. The question is silent about the amount at which the asset is purchased by the buyer. If the question is silent about it, then what do? Then we will now open this dabba and say, okay, there is one phone. Maybe it is worth some 10,000 rupees. Acha, this is some worth some 15,000 rupees. Acha, this is worth some 1,000. Like this, what are you doing here? You are looking at the assets which are there, and you are trying to determine the value of these assets. You're trying to determine, yaar, आज के तारीख में ये phone का कीमत क्या होगा, right? So what would be the worth of this phone if we are buying today, or if we have to sell today? So I'm like, hey, this phone, maybe when it was bought, it was 25,000 rupees. Today, what is the worth? 5,000 rupees. Okay, fine. 5,000 rupees is the worth. Because today, when I am buying these assets as a package, I would care to look at the value of the assets today. Concentrate. If you get the logic right, answers will follow. This is a package. I am buying this package. When I'm buying this package, I'm asking, hey, what is the value I should pay? The seller said, sir, aap kuch soch ke de do. And now I'm thinking, right? So how should I think? Maybe this bottle, this good water bottle, the seller bought at 1 lakh rupees. Maybe the bottle today is worth only not 1 lakh, 20,000 rupees. So 20,000 rupees, right? So you're arriving at that. Maybe this phone was bought by the seller at 1 lakh rupees, but today, for some reasons, this phone is worth, say, 5 lakhs. So I'm saying, 5 lakhs. Why? Some assets you are bringing to a lower value, some assets you are bringing to a higher value. Basically, based on what value? Value of these assets on the date of acquisition. Value of these assets on the date of purchase. Okay. So on this day, what is the value of asset? That is what you should think about. Hari, that is what you and I would do, right? So I would take this asset, just put this up on OLX and check what the price is, right? And then go and check online. So for old mobiles, what is the value? So like this, you are trying to basically find, my dear friends, get one point right. For these assets, you are trying to get what value? You are trying to get the market value of these assets on the date of acquisition. So each asset that we are taking, each and liabilities, whatever we are having to take over, assets, what is the worth of these assets today? Not the worth, if I want to buy one more asset, what is the worth? No. If I have to sell off this asset, what is the worth of that asset today? Similarly, if there are liabilities, if I have to settle these liabilities, what is the value at which these liabilities would be settled today? That is what we need to think about. So net asset method, concentrate. Sometimes we get confused. Somebody is also writing this intrinsic value, etc. Okay, right. Hari is writing intrinsic value, right? Listen carefully to this. We are talking about the market value. Preference is the market value of these assets, whatever we are buying. That is the value which I would call as the consideration, purchase consideration. But bear in mind, what if in the question, right? Maybe in real life, maybe in real life you have some other second-hand mobile companies or mobile shops, you will get the values. But what if in the question you are not provided with the values, market value of those assets which the buyer is buying on the date of acquisition? What would you do? Will you write question is incomplete because examiner did not give the market values of these assets? No, that kind of brilliance is not appreciated by the examiner. So what we should do is, we would say, if for these assets, if the market value, fair market value is not given, then we will assume that the book value of the assets itself is the fair market value. It is an assumption. It is not a rule. Please understand. These small points you need to get right. It is not a rule, but it is an assumption you are making. The preference is, I'm asking, hey, can I get the market value of these assets? If I can get the market value of these assets, I would love to know the market value. The purchase consideration would be calculated based on the market value. But for any reason, if I don't get the market value of these assets, then I might say, chalo, theek hai. So I don't know the market value, then what value should I take? Chalo, take the book value of the asset itself and consider it to be market value. Friends, I hope you are clear about the way in which, or first, how you prefer payment method. And if payment method is not possible, you come to net asset method. Please don't call it pooling of interest and all, Sonia. I'll talk about that later. It is not pooling of interest. So this we are calling as net asset method. In the net asset method, preference again, even in net asset method, is to take the assets, liabilities, and ascertain their market values or realization values, or for liabilities we call it settlement values. The effort is to know that value. For any reason, if that value cannot be ascertained, only then do we go with the other one, which is book value of those assets. Friends, are we clear about this? Right. So that is about the principle behind the payment method and the net asset method. Okay, right. Now, when you are talking about purchase consideration, let us get structured now. This will really help you. I talk about this even in our classes. So those of you who already took my classes, you already know. Friends, how do we approach this, friends? When you talk about purchase consideration, payment to, payment in what form? Payment to whom? Payment in what form? You will do workings and then write the amount. This is not a format that you have to by heart. It is not a format. It is a thought process that we need to inculcate. Those who just by heart formats don't do good, or that knowledge isn't really useful, right? So we need to understand the format. We need to understand the thought process. If the thought process is clear, then format comes on its own. I don't have to by heart or remember or write down and all those things for the format. Come on, tell me, friends. Payment to whom? This is payment to the owners. Owners of whom? Owners of the selling company. Payment to whom? Payment to the owners of the selling company. What type of owners are we talking about? Understand carefully, friends. Payment to whom? Payment, payment to, payment in. When you say payment to whom? Payment to the owners of the This is really helpful to correctly calculate. Okay, right. Payment to the owners of the selling company. Friends, who are the owners of the selling company? You may have equity shareholders or preference shareholders. Sir, there are debentures also. Hurry, yaar, debentures are not called owners. No, debenture is basically a loan, right? So if debenture is a loan, then why are you bringing in preference shareholders also? Preference shareholders are also basically they are kind of owners of the company, just that in terms of two aspects, that is dividend and amount payment in terms of liquidation, they have a priority or a preference over equity shareholders. But otherwise, they are also called as part of the ownership capital. Sakshi, just now I explained to you why preference shareholders are considered. Okay, right. So they are also called as a part of ownership capital. And even when we talk about schedule 3 for presenting the financial statements, under shareholders funds or owners funds only, we talk about preference shareholders also, equity shareholders and preference shareholders we talk about in the one next to the other. Okay, right. So payment to whom, my dear friends? Payment to equity shareholders of the selling company, payment to the preference shareholders of the selling company, right? Payment to these two people, this is the first box. Can anyone else come into this? Can I make payment to debenture holder? No, payment to the debenture holders of that will not come here in purchase consideration. Can I talk about payment to some bank? No, that does not come under this. So basically, payment only to these people will be considered for purchase consideration calculation. Now, some of us are already getting this doubt. Sir, the selling company has 5 lakh rupees loan. That 5 lakh rupees loan is with State Bank of India. This purchasing company made 5 lakh rupees payment to the State Bank of India. In that case, will that 5 lakhs, which actually we paid, should that go into purchase consideration calculation or not? My dear friends, I want to hear from you. Will that go into purchase consideration calculation or not? I'm the buyer. I made the seller company had 5 lakh rupees of loan from State Bank of India. I made 5 lakh rupees payment to State Bank of India. I think this has to go into purchase consideration calculation because I actually made that payment. No. Everybody is shouting no. Why? Why are you shouting no? What happened? What happened? Why? Why are you not considering? Tell me, my dear friends. I thought we should. See, I also have some more friends. Deepak Sai, Avinash, Rohit Reddy, they're saying, yes, sir, we are with you. Yes, we'll include it. Yes. Commerce company, I don't know who that is. Aishwarya Lakshmi, they're saying, yes, sir, we'll include it. Wonderful. Wonderful. I'm also getting more friends now. Some are saying no. Some are saying yes. Ultimately, you are paying. They are not owners. Are Rajendra, even though they are not owners, I am making that payment. No. Why am I not including that in the purchase consideration? No, not considered. Such amazing bunch of people you are. Come on. Think about it. Why is that payment considered or not considered? Only payment to equity shareholders. Chaitanya is saying only payment to equity shareholders. So whatever I taught till now is all gone. Preference shareholders are all gone. They are jumping off the window now. Method differs. No method, nothing. We have not come to method only. SBI is not the owner. It may be included. Okay. Liability. SBI is not the owner. For my money, I'm only the owner. No, I made that payment. Can someone please repeat the question? Ramasesha Gopal just now got up. Sir, what is happening? Suddenly I heard people are saying yes, no. What is all this? The question is, okay, now pause. Everybody pause. Okay, right. Please listen. See, these are the important points which we should master in this webinar. Okay, right. Missing mistakes, sir. Preference shares also. Excellent. You are fantastic. Okay, right. Now, friends, please pause. Now we will concentrate. Rahul, we understood that we focus only on equity and preference, but now we are talking about why. Okay, right. Why only this? When I make a 5 lakh rupees payment, right? Everybody, please pause. Now, when you keep posting, then other people also keep seeing. So just pause for some time. We will focus on the logic. If we get these important things right, solving problems is actually going to be a very easy process. Okay, right. Now, no more comments for some time. For next 2-3 minutes, please pay utmost attention on the logic. What is the logic? I, as a buyer, make payment of purchase consideration to acquire what? to acquire what? That is an important question to ask. We as a buyer make payment. Okay, I'll just try to write this and I'll show you. I hope it would be visible. Okay. Just if in case it's not visible, then you can let me know. I'm assuming based on last week, whatever we have done, that it would be visible. Okay. Right. Now, right. Concentrate carefully, friends. I am the buyer. I am buying from seller net assets. I am buying what? Net assets for which I will make purchase consideration payment. I will make purchase consideration payment. This purchase consideration we may determine, as we discussed, as per payment method or net asset method. That's okay. Okay. We may determine the purchase consideration using payment method or net asset method. That is okay. But what we are getting from the seller is net assets. Let us unpack what do we mean by net assets. Net assets basically mean assets minus liabilities. That is what we mean by net assets. Assets minus liabilities is what we mean by net assets. Okay, right. Assets minus liabilities, when I talk about the seller's assets, say, are 100, liabilities are 5. The net assets what I am buying are 95. The net assets what I am buying will be considered as 95 because the asset 100, liability is 5. Okay, right. Now, if of course, if you are trying to arrive at purchase consideration using net asset method, it becomes even more evident that that becomes the basis for purchase consideration determination also. Okay, right. Pause that point for a bit. Here, if I am making a payment of 5 lakh rupees, if I make a payment of 5 lakh rupees to pay off this liability what the seller has, okay, right. What will happen? I will make a payment. I will make a payment of 5 rupees. For what purpose? I will make that payment of 5 rupees and that 5 rupees is gone. Now, how much of assets earlier were we getting? We earlier, let us say for a moment, for convenience, let me say the purchase consideration using these methods, we arrived at 95. Okay, purchase consideration, we arrived at 95. 95 is the worth of the assets actually that are coming in, and 95 is the purchase consideration whatever we agreed to pay. Right, now pay attention, friends. 95 is what we agreed to pay and 95 is the worth of the assets. Now here, if I say for a moment, pay extra 5 rupees for settling the liability. If I pay extra 5 rupees for settling the liability. If I pay extra 5 rupees, what is the value of assets, net assets that I will get? With that extra 5 rupees, what am I doing? I will cancel the liability, right? That liability will go off. So in essence, what will happen? 100 minus this 5 I already settled means 100 is what will come to us. 100 is what will come to us. So I am paying 100 minus this 5 extra whatever we paid. Essentially, what is the purchase consideration still? And essentially, if you look at it, the purchase consideration still is 95 only. Please get this point right. Friends, I'm repeating, pay attention, because a lot of times I find students making mistakes in this logic. These are the points which we need to correct. It is not solving 20 problems in this webinar. That is not the main objective of this. The areas where students make the most mistakes have to be unplugged. If this is how it looks, then out of our pocket, 95 goes. Okay, 95 goes out of pocket. 95 worth of assets are coming in. Fine. Okay, right. Now, in the second example, what I gave, I said, I am paying extra 5, I am paying extra 5, and I am getting then not 100 minus 5, I am getting 100 minus 0, 100 as assets. Okay. So, friends, basically, in that case, what is happening is the in these assets there might be cash. Okay, in these assets there might be cash. So in another way, if you want to understand the logic, it is as if the 5 rupees, okay, please get this point, right? It is as if there is some 5 rupees, this 5 rupees gone, this 5 rupees gone. Okay, this 5 rupees of asset is reduced to that extent, and 5 rupees of liability also reduced. In essence, because the 5 rupees of asset is reduced, 100 minus 5, it will come to 95 only. Friends, are you clear about this point or not? Don't talk about goodwill capital reserve yet. First, I am talking about the purchase consideration when you are making payment towards a liability. This could be debenture, this could be loans, etc. You will not include that for purchase consideration calculation for this reason. Is everybody clear about this logic? I want to hear the response. Okay. Ravi Shastri says, sir, please explain again. Okay, right. I'm explaining it once again. It's important you get it right. Okay. Quickly I'll explain. So here all that I'm saying is there is a liability. Right. There is an asset of 100, a liability of 5. If there is 5 rupees which is going out, it is as if I'm just trying to make you, I'm asking you to think like this. It's easy for you to comprehend. I'm saying as if out of this 100, maybe there is some cash also. That cash of 5 is gone, and this 5 rupees of liability is gone. Okay. So if cash of 5 is going out from this assets, then this becomes 100 minus 5, 95. Then liability with that got settled. So 5 rupees of liability is gone. So 100 minus 5, 95 is what we still have as the net assets. So basically, when a liability is settled, the point to note is there is a reduction or there is a loss on one side which is compensated on the other side. Here minus 5, here 5. So both are knocked off in essence. I am saying to that extent, when liability gets settled, there is no impact on the purchase consideration. Ravi Shastri, are you clear about this point now? There was someone else. Rohit Reddy also asked me to repeat this. Harish also asked me to repeat this. Guys, are you clear about this now? I'm waiting to hear from you before we move ahead. Okay, great. Wonderful. Wonderful. Okay, now let us ask the other question. Okay, I'll come to that. The other question is what we paid versus what we got. This is always an important thing. Say we paid 95 and got 95. Excellent. You paid for 95, got 95. Fantastic. There is no, you did not pay more, you did not pay less. You paid 95, you got 90. Okay. You paid 95, you got 105. These are the three scenarios that we can talk about, right? So friends, if you pay 95 and you got 95, what does it mean? So here, come back to this logic. There is buyer who is getting net assets from the seller, right? There is a buyer who is getting net assets from the seller. For that, buyer is making a payment towards purchase consideration. Sorry, maybe the screen got slightly clumsy, but I think if you are following everything, it should be easy for you to comprehend what I'm discussing. I am getting this, I am paying this. Are you able to understand clearly what I'm talking about? I am getting this, okay? I am paying this. To determine what I am paying, I have two methods. That's okay. That we spoke about. Payment method and asset method. Fine. Okay. Right. Now I'm comparing these two. What did we get? What did we pay? Friends, I hope you are clear about what these two things are. Okay. Right. We paid 95, got 95. Absolutely fine. You got the worth of what you paid. So there is no goodwill or capital reserve. But if you paid 95 and got 90, it means it's something like this. Okay. Um, in this pencil box, I try to get all these things from my kids' cupboard to make sure that we have these for discussion. There are 10 pencils in this box. Okay, right. Say each pencil is worth 100. Okay, for discussion sake. For each pencil is worth 100. 100 into 10, we would expect 100 into 10, this must be 1000. That might be the expectation. Okay, right. Now, I came to check the MRP on this box. I find the MRP on this box to be not one. If it is 1000, then it's a fair. I expected it to be 1000. The worth that I got is 100 into 10, 1000. And you are asking me to pay 1000. So I paid 1000, got 1000, no problem. But imagine you saw that the worth of assets inside is 1000, but on this MRP 1200. Huh? And like, each pencil if we buy, it is 1000 only, but nicely they put all designs. I'm not promoting any pencil brand here. Okay, right. We are, if all these are nicely packaged, conveniently even offered, for that they're saying pay extra 200, right? That extra 200 what we are having to pay because of this packaging and this brand, some brand, okay, doesn't matter what brand it is, that is what we are calling as goodwill. Excess of what we pay over what we get. So let us come back to our example. So here I paid 95, but I got worth 90 only, right? Now you'll never forget that 1000 rupees, 1200, that example should remain in your head. So this extra whatever you are paying 5 rupees, that is what we call as goodwill. Okay, right. Now here goodwill 5 rupees. Here we paid only 95, but we got extra. Sir, discuss ledger accounts balancing figures. Harish Naidu, I am actually unsure whether in this call I scheduled time to discuss so much about ledger accounts and balancing figures. But let me see. I mean, I first wanted to talk about the concepts where students have been consistently making mistakes, because I don't want any of you or any of our Indigolan students particularly to make mistakes in areas like this. Okay, so the effort is towards that. I'll see if time permits. I might touch upon that, but I'm not committing that. So if I pay 95 but I get 105, should I call this 10? Sir, profit, credit to P&L. No, this is not what we earned. This is the profit in some sense what we purchased. Okay, it is not what we earned by doing business. This is something, well, at the time of purchase itself, we find it to be a profit. We call it as capital reserve. Okay, right. So now we are clear about the concept of goodwill, capital reserve, and please tell the ledger name only. Okay, so we'll talk about that. So I am first talking about this goodwill capital reserve calculation. So friends, is everybody clear about the thought process of purchase consideration, then goodwill capital reserve? Are you clear about discussion to this extent? Can I assume this and move to the next one? Goodwill is excess of what we pay over what we get. Capital reserve is excess of what we get over what we pay. Okay, right. I just want to hear from you. Is everybody fine with these concepts? I want to move to the next one. Yeah. Okay. Excellent. Wonderful. You're all brilliant students. Why capital reserve? Capital reserve because in this the dabba has 1000 rupees, but there are 11 pencils in it. Okay, so independently it would have only been it would have been 1000 into 100 into 11 pencils, 1100. We did not have to pay 1100, we paid only 1000. So excess of what we got extra 100 over what we paid. That is why we are calling it capital reserve. Okay, right. So Sheza Ravi Shastri asked me for capital reserve. So I hope this concept on capital reserve is also clear. Right. Now, the next one. In purchase consideration calculation only, there are a few other important areas where we need to watch out. What we pay when we are paying, right? So we can pay in the form of equity shares also. We can pay in the form of equity shares. Now, there are two people. Payment to whom? Payment to equity shareholder, preference shareholder. So that we are clear about. So I will write this here. Payment to. Payment in what form? Okay. Payment to whom? I think next time I should actually have a high stool here so that probably you can see things more clearly. Okay. Right. Payment to equity shareholders. Equity shareholders. Whose equity shareholders? Equity shareholders of selling company. Of selling company. Similarly, preference shareholders of selling company. Okay. Equity shareholders of selling company, preference shareholders of selling company. Right. Then here, payment in what form? Payment in the form of equity shares of purchasing company. Equity shares of purchasing company. Then it could be preference shares of purchasing company. Okay. It could be debentures of purchasing company. It could be cash. Anything. Okay. So it could be any of these. Similarly, even for preference shareholders, we can give any of these. All the four I'm not writing here, but essentially we are saying all this. Payment to preference shareholders could be in the form of equity shares of selling company. Hey, but wait, can I give to equity shareholders of selling company? I want all the intelligent people to answer here. To the equity shareholders of selling company, can I give, to the equity shareholders of selling company, can I give equity shares in purchasing company? Yes or no? Can I give? Is it permitted? Can I give to the equity shareholders of selling company equity shares of purchasing company? People are saying yes. Okay. Now my question, more importantly, can I give to the equity shareholders of selling company? Can I give preference shares of purchasing company? Can I give that? Is it permitted? Preference shares. I'll type preference shares. Can I give? Oh, acha. So to the equity shareholders, I can give preference shares also. Okay. To the equity shareholders of selling company, can I give debentures? Think carefully and answer. Think carefully and answer. I'm typing debentures. Think carefully and answer. Huh? What? What? Yes. You really understood. Now nobody can confuse you. Okay. I've been trying my best to do that, but you seem to be way too smart now. Okay. Right. Okay. Great. 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 Now, can I give cash? Sir, how will you give cash? Cash, 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 cash. Cash, 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 cash. How will you give cash, sir? Modi ji will come behind you. Don't give cash, sir. Risky, sir. Don't do that, sir. We can give cash also. Oh, no. Vigneshwaran is very scared of Modi ji. He's like, no, sir, don't give cash. Why all this faltu mein tension? Others are saying, Arey, de do, sir. Deke dekho. What will happen? What big deal? Give cash. Others are saying, okay, wonderful, my dear friends. So you can give even amount cash. Okay, see, we're not going to income tax. Okay, we will not go into income tax because these principles of valuation, what you are learning for purchase consideration, these are common across the world. Okay, This is not to do with India. These principles are common across the world. So you can give for the equity shareholders of selling company even amount. Okay, when I say cash, amount also can be given. Right. Now, tell me this. For the, okay, now stop here. For the preference shareholders, can you give equity shares of, why not in the name of selling company itself? Selling company is going to be shut down, no? That is why we are not talking about selling company. Okay, right. To the preference shareholders of selling company, can I give equity shares? To preference shareholders, can you give equity shares? What? Yes, sir. क्या बात है, क्या बात, right? Excellent. You're all lovely students. Now, to the preference shareholders of selling company, can you give preference shareholders? You're like, sir, you ask questions as per our level. This is not our level. This is too less. Preference shareholder को preference shares, of course, दे सकते हैं. Okay. Now, here is a tricky one. To the preference shareholders of selling company, can you give debentures? Think about what you learned in law, all of that, and answer. Okay, preference shareholders of selling company, can you give debentures? Can you give debentures? Important, huh? Think deeply. Yes, somebody is saying yes. No tricky we can give. People are like, sir, what you people are, you are just doing underarm bowling for international batsmen like us. Okay, right. Understood your competence, understood your awkaat. Wonderful. No, sir. Rock. Who is this rock? Who is saying no? Brilliant students. Okay, right. Now, friends, you can. The point is, purchase consideration is determined by the selling company and purchasing company. In what form they give, all that is their headache. Okay, so you and I cannot tell. They'll ask, please go out and play, we will decide the purchase consideration. They'll tell us. If chartered accountants decide or accountants say, hey, don't give this, don't, they will decide. First of all, the business will decide. If you're on the business side, of course you will decide the form in which the purchase consideration could be settled. Okay, right. So here you can give in any form. Now let me come to the important areas where we need to be careful. Okay, Tarun Kumar, sir, sorry to disturb you in middle of class, but very thank you for for providing free CA foundation lectures. A small request, that can you please extend validity more 5 days, please? Okay. Tarun, it was an important and a very timely decision. Very proud of the management of Indigo Learn. People, all everybody just quickly agreed to this and came to same page and decided to do what is right for the students, not what is easy. It's a very tough decision. We put a lot of effort into making our content compared to most other content providers that we have today. But that said, we realized this is a time when we need to stand by our lovely students, and that is a call that management has taken. I'm also thankful, truly from the bottom of my heart, to the entire team of Indigo Learn for having accepted this decision. And now, where with respect to this validity extension, please write to the team, and then we can see what could be done. So we will focus back on this, right? So friends, now let's talk about the area where students make the most mistakes. Sir, you are giving money to the equity shareholders of selling company in the form of equity shares, right? Now, for every one share that they have, will you give one share? Is there a rule like that? Now, listen carefully. The equity shareholder of the selling company, equity shares of selling company are traded at 100 rupees. Equity shares of selling company are traded at 100 rupees. Equity shares of purchasing company are traded at 500 rupees. Equity shares of purchasing company are traded at 500 rupees. Now, you are a selling company. You have 100 rupees notes in your pocket. Okay, I have 500 rupees notes in my pocket. Is it fair for you to ask me, for every one note I give you, you also give me one note? Okay, is it fair to ask? Can the selling company's shareholder ask, I'll give you one paper, you give me one paper. What is there, sir? One paper, that's all. Is it fair? Selling company shareholder will say, yes, sir, it is fair. What is wrong in that? Maangne mein kya jata hai, right? So, selling company shareholder may ask. Now, imagine for a moment. Selling company's shareholder asked me, others are saying, no, sir, this is not nyayam, this is not dharmam, this is so, there is so much of injustice, this is not fair, all of those. Okay, listen. Selling company's shareholder's share is trading at 100 rupees. My share is trading at 500 rupees. Listen very carefully. I agreed. For every share that you have, I will give you one share of my company. I agreed. Okay. I'm the seller. I'm the buyer. I agreed. For every one share, I'll give you one share. Who are you to have a problem? Why are you saying no? So who is this commerce company, Ravi Shastri, Suraj Aju? Who are you to say no? This is a contract between me and the selling company. Are you getting it? So the buyer and seller can decide and figure out at what value the purchase consideration should get exchanged. So, should I give one share? Okay. Should I give one share? Should I give two shares? Or for every 5 shares, should I give one share? What is the most important thing that you should know for purchase consideration calculation? Understand between these two parties what is agreed upon. I am writing some important points. You have to follow this sequence. What is agreed upon? What am I writing? Agreed upon. Agreed upon terms and conditions. What are the agreed upon terms and conditions? You will not put your judgment above the agreed upon terms and conditions. If this is what the buyer and seller agreed upon, come on, you have to just accept it. You cannot say this is possible, this is not possible. Okay, friends, is everybody clear about this important point? Even if the shares of selling company are at 100, purchasing company are at 500, if both the parties agree upon that for every one share, I'll give one share, done. You are not the one who has authority to say it is unfair, it is too much, all of that. Okay, right. Now, what if nothing is agreed upon? Meaning, what if the agreed upon value is not given in the question? What if the agreed upon value is not given in the question? Sometimes the question will give agreed upon value only, but in a slightly different way. We call it swap ratio. Okay, this is also in some sense agreed upon value only. Okay, right. What do you mean by swap ratio? You hear this. I'm sure you would have seen 2:1, 3:2, these kind of ratios for shares. Okay, right. Now I am asking this question. I want everybody. Hey, that intrinsic value, market value, heroes. Hold on for some time. We will come to those values. We have not gone to those yet. Swap ratio 2:1. What does 2:1 mean? Hari wrote 2 for 1 held. Harish, I think you are writing in a language which is like very high, significantly above my ordinary level. Come on, bring it down, dumb it down. What do you mean by 2:1? 2 for 1 held means what? What is the meaning of 2:1? Intrinsic value, everybody is saying, keep intrinsic value aside for a moment. First focus on the swap ratio. What is this 2:1? What is the meaning of 2:1? 1 for every 2. For every 1 share, 2 shares will be given. 1 share where, 2 shares where? Arey heroes, when I say 2:1, what does it mean? People are like, sir, why are you saying only heroes? There are heroines also. Yes, heroes and heroines. Some people are saying, sir, like you, we are villains. We are also there here. Okay, heroes, heroines, villains. Two is to 1. Okay, pause here for a minute. See, I hope now you understand why I am going into the depth of these small points, because these are actually no longer small. When it comes to examinations, these are the areas where students make mistakes. So 2:1. Please stop posting. I will now look at how the students have given answers. This will give you a perspective of why examiners find so many mistakes in this particular step, right? Look at this. Like 2 for 1 held, 1 for every 2. Okay, opposites. Then for every 1 share, 2 will be given. For every 2 shares, 1 will be given. Right, one after the other. Just you. I want you also to go through those comments. Right, you find all sides of the argument. I'm waiting. 2 is new. Wow. 1 is old. Wow. Okay. Right. Then 1 in selling, then you get 2 in purchasing. Then there will be in discount coupon you will give something like this. Okay. Now concentrate carefully, friends. Concentrate. Stop writing. Stop writing. Focus here. Right. 2:1. 2 for 1 head. 2 for 1 head. I will write this, and after this, none of us should get confused about this point. Okay, right. So I'm writing what this 2:1 swap ratio means. So what did I say? 2:1 means 2 for 1 held. 2 for 1 held means 2 shares of new company or purchasing company, okay, for 1 share held in selling company. Listen carefully. Without getting this right, that kind of confusion and opposite logics that we have been fighting about, that will continue. Okay, right. 2 for 1 held. Where is that person called shareholder of selling company already holding shares? Shareholder of selling company is already holding shares in the selling company. No, obviously, right? That person is already holding shares in the selling company. 2 for 1 held. Oh, if you're holding 1, then we will give you 2 shares in the purchasing company. Is everybody clear about this? Okay. To know whether you are clear about this, I want you to help me decode this. 3:2. What does it mean? Please write the full sentence till we get comfortable with the logic. This you write in the form of a sentence. Please write that as a full sentence. It might sound like, sir, why are you making us write all these small things? We are all PhD people for accounting. No, but still you will write so that we can be thorough with these important small concepts. Okay, come on, friends. What is this 3:2? Please write this. 3:2. How do you read this? 3 shares of new company for every 2 shares of selling company. What Ramaseshu wrote is also correct. Ramasesha Gopal. If 2 shares are held in selling company, then you'll get 3 shares in purchasing company. Okay. 3 shares of buying company for every 2 shares. Okay. Right. Wonderful. Such a lovely bunch of students you are. Right. So just 2 minutes ago, we had every 2 comments being opposites. And now we have all the comments being consistent. Right. So that is a great example of how quick you are in terms of learning and how amazing each of you is. Okay. Proud of you all. So this is one important aspect. We call it swap ratio. Swap ratio. Okay, friends, now I'm fairly confident you understood that swap ratio. So stop writing. Over. Writing business, full stop. Stop writing. Over. Okay. Nandakumar's comment, I think, should be the last comment before I again ask you to respond to this. Okay, right. Pause here. So here we are saying the swap ratio, if it is clear, some people call it swap ratio. That's fine. However you want to pronounce it. English is not our mother tongue, so we will keep pronouncing it the way we want based on where we did our school, it's perfectly okay. Right. Now, when you talk about the swap ratio, if it is given in the question, take the swap ratio. If the swap ratio is given in the question, you assume that it is the agreed upon ratio. If swap ratio is given in the question, you will assume that, consider that to be the agreed upon ratio. If agreed upon number of shares, we'll come back to this. If agreed upon number of shares, here, for these many shares held by the selling company, by the shareholders of selling company in the selling company, how many shares they will get in the purchasing company, whatever is agreed upon, you will consider. The first one that you discussed for agreed upon is swap ratio. Okay, right. Now, if agreed upon are given, you are taking that. What if it is not given? What if it is not given? It's possible, right? Examiner can test us with incomplete information. That is what exams are, after all supposed to be. So they might test us with incomplete information. Like, I'll not tell you the swap ratio. Now tell me how you will calculate. Then you're like, yeah, you shouldn't do like this. Then you might ask a question. Hey, there is a paper in my pocket. There is a paper in your pocket. What is the worth of this paper? Earlier, agreed upon ratio is like, we agreed upon. For every paper, one paper will be given. For every two papers, one paper will be given. So like that, we agreed upon. That is a different story. But now I'm talking about it is not agreed upon. But question tells you that the selling company's shares are at 100 rupees each. Purchasing company's share is at 500 rupees. Purchasing company's share is at 500 rupees. There are 100 rupees notes in your pocket. There is a 500 rupees note here. Now, if I have to buy out the net assets, okay, one small point you need to understand here. This is the balance sheet, say, okay, this is the balance sheet. Shareholders funds, okay, assets, I'll call it liabilities, okay, right. Assets minus liabilities is equal to shareholders funds, correct or not? Assets minus liabilities is equal to shareholders funds. So if shareholders funds are 5, liabilities are 5, assets should be 10, because these days balance sheets are tallying, right? Even after Corona, I heard that balance sheets are still tallying. So no problem. So here we have shareholders funds, assets minus liabilities. Assets minus liabilities, which we are calling as net assets also, right? Okay. Now, my dear friends, here we are buying the net assets. Basically, we are getting the net assets. Today, who has, these are the selling, this is selling company's balance sheet. Say, you have to understand, see, this should be a very natural process in our head. Selling company's balance sheet, net assets. I come to your home, okay? There is some television, there is an air conditioner. I come and I want to take those things away. Who has right on those? Whose hand invisibly is already on that TV, already on that AC? Your hand, because you are the owner of that. You already have your hand or right on that particular item. If you have to remove your hand from that, how much should I pay you is what is purchase consideration. Okay, so net assets